Share Shootout brought to you by Lion of Africa Insurance, insuring South Africa's future.
You're watching the most conniving, cunning, mean, backbiting, backstabbing, stock-picking show on television. This is Share Shootout League. I'm Bruce Whitfield. Now, has SARS officially adopted pay back the money as their mantra? Speaking of paying back the money, isn't Jacob Zuma, Julius Malema parliamentary spat just a case of a pot calling the kettle black? It's a turn-off phrase, don't get cross. And if Capitec is the new African bank, then what's the new Capitec? We offer absolutely no answers to these vexing questions. All we know is the Share Shootout League is hotting up and it's at boiling point. As you can see from the results of last week's match between Neo, the one, and Chris, the Scot, this one moves the Scot firmly into the big boy league. He's now on 6 points and can also aim for number one spot, where Gary, the running dog, has made a nice, comfortable nest. For Neo, the one, the quest for 3 points continues. He desperately needs your help, but it's all scraps, brawls and bare-knuckle fights from now on. Having a look at the bottom of the league, look at Neo, look at Leven, right down at the bottom of the league. It's not a happy place to be. So let's move on then to you being the decider. You decide who wins our next match and ultimately who will win the Share Shootout League. What you have to do is you follow at SSO League. You tweet any of the stock pickers hashtags. We don't ask why you vote for them. We just count anything with a hashtag. Back to the match at hand. Our first stock picker has a religious Tuesday morning shopping experience with She Who Must Be Obeyed at Macro. Why do you tell us these things? But anyway, if you want to tell us your secrets, we'll put them on television. Our stock picker, our second stock picker, is a punching bag to a 1-year-old called Gregory John Smith. Let's check out the players.
Sid Vianello. I'm an independent investment analyst and investment advisor. I like looking at themes. I devise themes to suit the particular investment climate, and I try investing in companies which fit into whatever theme I believe is appropriate for the business cycle at any one particular time. At this point, I don't have a game plan. This is the first time I'm in the competition, and I would say I would probably end up devising a game plan as we move along and as I get a feel of how things are developing. At this stage, I would simply say Sasol, simply because he's the longest serving member on the team, and he is a very experienced and very successful investment advisor in his own right. I wouldn't have entered if I didn't think I had a good or a reasonable chance of winning it. At the end of the day, it is a game and we all here to have fun, but deep down, we all want to win it as well.
Nic Norman-Smith, Chief Investment Officer of Lentus Asset Management. We follow a value investing approach here at Lentus. We generally are quite contrarian, so looking for areas of the market that people are really hate and are nervous of, and that's where we believe we can find the opportunities. I think it's about finding some stocks that the audience really like, exciting, and try and spice things up a bit and not just have the boring old favourites. I think Bruce Whitfield is definitely going to be the biggest troublemaker on the show. Yeah, absolutely, one must be positive. I think it's going to be a tough competition, so for sure.
Both Sid Vianello, the independent analyst, and Nic Norman-Smith from Lentus Asset Management are well poised to make a charge at the league leader, Gary, the running dog. First, though, the house rules. Both of these guys have got 3 shares. Only I know what they hold because they're right in front of me. Each of them must accept one of their competitors' picks, and each has got 30 seconds to argue their pick. They must pick from the JSE, and we give them an offshore allowance as well, so they can pick an international stock per round to keep things spicy. Now that the rules are out of the way, we're ready for a scrap. Do you really go with a trolley every Tuesday morning with your wife?
No, not
to
my
Macro?
wife, my business partner.
Your business partner. That's even more terrifying.
This is not domestic. This is not purchasing for domestic purposes. This is purchasing for my one business operation.
There we go. I was concerned for a moment. I just thought, if you're going to Macro, buy lots, and then you don't have to go back every week. But now you've explained it. Now what you need to do in the next 30 seconds is explain why you like Macro so much that you want to own Massmart shares in 30 seconds.
I don't want to own Massmart.
You're going short on Massmart?
I'm going short on Massmart. Very simply, 6 years down the line, post the Walmart takeover, sales have probably doubled. Earnings, which will come out in a few days, have gone down. The company targets the bottom end of the market. There's no money from any of the banks. The banks are now calling for money to be repaid, not to be advanced. There's no money to be spent. Their core businesses target the bottom end of the market. PE of well over 20, that's going higher. I don't want to be there.
The king of retail is shorting Massmart. And look at Nic Norman-Smith. He's got a happy smile on his face. He's going to take this one with both hands.
Well, you know, exactly the king of retail. But no, I completely agree. If I look at the financials of Massmart, if I didn't look at the stock price, I'd say this must be a value stock. It must have been absolutely slammed by the market because, as Sid says, earnings have done absolutely nothing. This looks more like a UK retailer that's trading on a 10 PE than a South African retailer that's trading on a 25 PE. I feel like I'm living in a parallel universe that the stock is priced so highly. I mean, my only concern about going short is that you do have the big shareholder in Walmart who's more than likely going to pick it up. So practically speaking, I don't know if the risk reward is there, but I certainly think it's way overvalued.
Before you make a call,
they can't pick it up because they would then have to declare that they're picking it up, and they may have to make an offer to minorities. And I don't believe with the problems that Walmart has in their core United States market, with Doug McMillan, you know, the head of international, now become the head of the group. I think Africa, and in fact the rest of the international business, I think he's taking a back seat while he tries to sort out the problems he has in the United States. So I don't see that coming.
And this is the key. And if you look at all of these foreign retailers, it's so difficult to replicate your model outside your home country. Even Walmart, the greatest retail business out there, burnt in South America. It doesn't look like they made a great deal so far in Massmart. Tesco have done the same thing when they've moved out. Moved to the US, got burned as well.
We all saw the trading updates. I mean, is this the real reason why Grant Patterson left?
Management and the company will no doubt deny it, but if I look at the track record and I look at the tenure of Grant, and Grant's a hell of a nice guy, but he was in charge throughout that entire period when the earnings did nothing, in fact went backwards, as will come out in the next few days.
Is the acquisition
with a high risk that the dividend's going to be cut?
He spent 2 years trying to bed down this deal. His eye was off the ball. He left the running of the business up to Guy Hayward, now the chief executive, and the executive team. Was that strategically a mistake to do that?
Well, he didn't really leave it to Guy. Guy was the financial director. He left it to the individual people who ran the four core divisions. The head of game isn't there anymore. The head of the cash and carry business isn't there anymore. They've been replaced. So clearly the people who were running two of their biggest businesses, the fact they're not there anymore tells you something.
And you're shorting it. Are you going to take the short, or are you still apprehensive because of the fact that Walmart is such a big daddy shareholder?
No, I take the short. I mean, I agree. I think I just can't understand 25 times earnings for this. We're at Lentus, we're not growth investors, so Shoprite looks expensive to us, but I'd rather take Shoprite on 20 times than Massmart on 25. Fine. At least it's growing.
You're taking the short on Massmart, which is great. Okay, Nic Norman-Smith from Lentus Asset Management. You're going global first before focusing back on local companies. In 30 seconds, why do you like Vodafone?
One of the world's leading cell phone providers. Great barriers to entry into this business. They've got a lot of infrastructure on the ground, great brand, and a big set of customers. So they've got operations across Europe, India, and South Africa as well, obviously with their Vodacom stake. There's a lot of latent value there. They own 33% of their customers on India, makes 5% of their free cash flow, because that industry has been very, very tough. Consolidation is coming. There's some upside, and you're paying a very cheap single-digit PE for it.
Okay, there we go. Vodafone. What do you think? What do you think of that one?
It's a great business, but I'm not taking it.
Why not?
Very simply, Vodafone, like many of the cell phone companies around the world and in this country, there's no growth in earnings. I prefer, and the reason why they're being promoted is because of supposedly high dividends.
Yeah.
You know, dividends and growth normally counteract each other. I'd prefer to be in the growth company rather than the dividend company. And I just say with Vodafone, and I'm not taking it at this point, so I've got to take the other two, whatever they may be. So I'm going out on a limb, but for me, I don't see the price of Vodafone going anywhere. in the short term.
With the dividend yield of 7%, I mean, that's massively generous.
Yeah, look, that's not quite accurate because they paid a special dividend. So this is why this is an exciting prospect. They were very, very bad. This business over the last 10 years, they destroyed a lot of shareholder value through the TMT boom. They've got new management in there. They sold their stake in the US for a great sum of money. And they paid most of that out to shareholders, only reinvested a small amount, and they're investing in smart areas. So finally, a cash churning business with a management team that is allocating capital wisely. Look at the opposite end of the spectrum with the telecom. Yes, it's generating cash, and they're blowing that cash completely. So they're paying you out a dividend, and then they're reinvesting the rest wisely. There is still, you've got a set of customers here. You can sell up to them. You can sell additional products.
Yeah, but I mean, let's look at MTN's announcement coming out now, or the union announcement that MTN's planning to cut management jobs. These things have run hard for 20 years. In Vodafone's case, probably a little bit longer. And they're not run out of runway.
Well, that's exactly why you don't pay the premiums that so many of them
okay, but Vodafone,
come on. So
Vodafone is a good value option for you.
Yes, price is a function of the value that you've put out there, and
but you're not
paying a
taking
cheap
it,
price.
Vianello.
I don't want it.
You don't want it. You're
No.
shut down on that one. Okay, Sid Vianello, let us move on to stock pick number 2, which is interesting. It's worth less than 10 billion rand. It's not quite a small cap, but it's on the smaller side of the large companies on the JSE. KAP Industrial, interesting choice in 30 seconds.
Interesting company. The core business, transport, operates in a non-cyclical part of the transport arena, fuel and chemicals being the major part of its business. But the most exciting parts of the timber business, they're the preeminent player in the market. All their output is now value added, and they've got either a guaranteed domestic market or a guaranteed export market for the entire output. So whichever way the South African economy goes, the entire output of all value added product is going to be sold to somebody, whether it's in Australia, which is a core market, or the domestic market. It doesn't matter.
You're stealing time.
It's going to be sold.
KAP Industrial, do you like it?
Not particularly. I mean, in the transport business, relatively low barriers to entry to transport, and you can get hurt quite badly, as we saw with a business like Super Group did. So it's highly competitive. A lot of players getting in there. So what's your real barrier to entry? On the industrial side, sure, there are all of the problems that people attribute to the miners. So increasing labor costs, regulatory problems, etc., etc. But building sort of value-added products is not. We don't have a monopoly on it like we have monopoly on platinum and some of the other resources.
And
so
look how great, look how well those have turned out.
Look at the qualitative.
Yeah, but
so from qualitatively, I don't think it's the greatest.
But the transport side of the business, the passenger transport side, is a stable business with guaranteed margins and guaranteed numbers. And as long as we have mines that go underground that employ a lot of people underground. I know some mines may close. I mean, you've heard rumours about Lonmin or what have you. But I mean, as long as there are mines with lots of people underground, they're going to require transport back to wherever they're coming from, their places of where they reside. And fuel and chemicals, I know the industry because I'm involved in it in my personal capacity. The demand is there, and as long as South African refineries are not increasing capacity, there will be more and more demand for fuel to be transported from the coast. That is until the pipeline is finally fixed up. But you've also got micro distribution, which is where they are they are in fact together with Imperial the leading player.
Increasing costs. The cost of the fuel.
Yeah, but that's recovered. That's recovered in the margin. It's recovered. E-tolls is going the end of the year, but it's recovered. It's recovered in the margin. I mean, it's recovered in the margin. You have to give them the margin, failing which you won't be able to get petrol at your local petrol station tonight. Because if they don't get the margin, they aren't going to distribute. And then what?
There'll be other competitors that come into the market.
No.
And what if the mines do slow down?
Do you have any idea what it costs to build one of those tankers?
What does it cost to build one of those tankers?
Tens of millions of rands.
Well, I don't want to do that. That's terrifying. Okay, Sid Vianello, a very strong case being made for KAP Industrial, but you've just been poo-pooed. The youngster thinks he knows better. Okay. So let's see if he does know better. You're shooting down KAP Industrial. You've accepted the short on Massmart, so I think he's playing the game over here. Okay. Nic Norman-Smith, let's stick with that industry. Let's go 400 billion rands worth of fuel in Sasol in 30 seconds.
The world's leading manufacturer of motor vehicle fuel from coal. They've obviously got a captive market in South Africa, massive barrier to entry. No one's going to be able to build these refineries. They're pumping that cash offshore and taking advantage of very cheap natural gas, which they also now have the technology to turn into fuel. So at the moment, the spread between oil and natural gas is large. So buy the cheap feedstock and turn that into fuel. Less than 10 times earnings, so there's some risks in moving over to America, no doubt, but you're not paying a premium for that.
The most often picked stock on this show is Sasol. Sid Vianello, you're in the fuel business. Do you like Sasol?
I have no problem buying Sasol and taking it. I have no problem at all. I think I may have punted Sasol.
I think you have.
On a previous occasion as well. What I like about the business, it's unfortunate that they didn't discover the gas in northern Mozambique, but I have no doubt in my mind that within 10 years, Sasol will themselves be building a GTL, whatever it is, plant in northern Mozambique in conjunction with Anadarko or ENI, converting that gas into fuel. I have no doubt that's going to come. In exactly the same way they're doing in America, they'll do it in northern Mozambique with a guaranteed market. So I'm perfectly happy to go on board. I don't care if they take on some debt, because they have the experience, they have the understanding of the technology to be able to do it. So, I mean, you're talking to the converted.
There we go, preaching to the converted. He'll take Sasol off your hands on that particular one, Nic Norman-Smith. It's never too early to take to Twitter. What I need you to do is to follow at SSO League and to cast your vote for either Maverick, that's Sid, or Value Guy, that's Nic Norman-Smith. Use the power of the hashtag. And you talked about Sid's stocks for the independent analyst, short on Massmart, and Nic Norman-Smith grabbed that with both hands. Neither of them thinks the prospects for Massmart in the short term are anything but bumpy. And the KAP Industrial, Nic Norman-Smith wasn't listening. Sid Vianello tried really hard, but he got shot down without too much ceremony. Nic Norman-Smith from Lentus chose Vodafone and Sasol. Vodafone shot down as a dull business that won't deliver on the growth, but Sasol grabbed very, very strongly. So we've got two stock picks left to go. One is international, one is local, both in the world of financial services, and both with some very interesting stories to tell. More on those in just a moment. You're watching CNBC Africa, first in business worldwide. This is Shootout League, the only league where you cannot fire the manager. Get it? They're all fund managed. Anyway, I know it's lost on you. Remember, this is match day number 18, and through your Twitter votes, one of these two handsome stock pickers can change the look of the league. All you need to do is follow at SSO League, and you vote for either hashtag Value Guy or hashtag Maverick. Their shares this evening, Sid Vianello, short on Massmart, accepted by Nic Norman-Smith. KAP Industrials going long on it. Nic Norman-Smith doesn't want to hear a single word of it. Nic Norman-Smith going long on Vodafone, and Sasol. Sasol was accepted. Time to roll up our sleeves and play dirty as we get to our last share picks for this evening. Sid Vianello, you went first last time. We'll put the burden then onto the shoulders of Nic Norman-Smith from Lentus Asset Management. Okay, you can't be serious. 30 seconds on Standard.
I know, unfortunately this market's expensive. We've run out of exciting stocks. Standard Bank, leading lender in the largest lender in Africa, makes most of its money in South Africa, but has gone into an African expansion, which is starting to pay quite nice dividends. Reasonably priced at around 1.6 times book. It's come off a bit after the concerns with the African Bank, unwarranted, I think, in the broader scheme of Standard Bank. I think the key is this was a really popular business, trading at probably 4.5 times book back in the peak when it was the exciting global growth story. It's now dull and boring, as you said. Now you can get it at a reasonable
perfect
price.
Opportunity to buy some Standard Bank. Standard Bank, the most loved share, banking share on the JSE throughout the tenure of Jacko Marie. People remember the huge turnaround story at Standard Bank. And then it's not done very much else, Sid.
You know, as an investor, I'm very happy to invest in any of the banks. And I certainly wouldn't, run down one bank at the expense of another. I think perhaps one of the other banks, certainly one of the other banks may perform better than Standard Bank over time.
What do you think, in Nedbank or First Rand?
No, it would be First Rand. But I certainly would not, shoot down Standard Bank simply because it isn't First Rand. I'm quite happy to be in the banks. The PEs, as you've just said, are let's say, they're not overpriced. One thing Standard Bank, I must be honest, I think they did right, is they got out of RCS, the bottom end of the lending market, to them and Fashini. They got out at the right time. The check's in the bank. It was in the bank a month ago, and they can now move ahead with a much lower exposure to the market that ultimately killed African Bank. So I'm very happy to be on board. As I say, whether it's Standard Bank or any one of the banks, I'm quite happy to be there.
So he's taking 2 of your shares this
No,
evening, Nic
I'm
Norman-Smith. He's playing the gentleman's game. You see, put a tie on him and he'll do anything. But that's an interesting one, because banking shares don't tend to generate massive returns over time. Hopefully they give you a decent dividend, but they are kind of dull.
But Nick has just said, the market's expensive, it's difficult to find something, and there comes a time where you've got to say, listen, I've just got to go for something good and solid and stable where I'm quite happy, I'm going to get earnings.
High barriers to entry, unlikely to get, I mean, Capitec's a wonderful story because it came in and actually managed to compete, but you really don't get a lot of competitors in the space. As long as you run the business conservatively, you sit on, so people are complaining, oh, Standard Bank has got too big a cash pile, it needs to be more aggressive. I'm very happy to sit on that cash pile, because as we've seen, when things do go wrong with the bank, you want to have that capital. So in banking, boring is fantastic.
Okay, so you'll take it.
No, I'm quite happy to
There we
take
go.
it.
So he's taking 2 of your picks this evening, Nic Norman-Smith. He's taken both Sasol and Standard Bank. Will you have the manners of Sid Vianello, however? He's going to the United Kingdom. He's going to Discovery Health's joint venture partners in the United Kingdom, one of the biggest insurance companies in the United Kingdom. He's the man from the Prudential. Why do you like it?
The Discovery thing is only a tiny part of the business. What I like about the business, it's a global assurance business with over 30% of the earnings coming from the Far East, whether it's Hong Kong or China or Vietnam or any one of those countries. That's what I like. With 15% odd in the United Kingdom, another 15% in America, and another 15% odd coming out of M&G, the asset management company. There's an element of risk in M&G, but what I like is the global aspect of the business, not dependent on a single country. And more importantly, with that focus in the Far East, where I think there's going to be a lot of action as opposed to the first world.
Okay, it's interesting. I mean, we could buy Sanlam or Old Mutual. They've got businesses in China too, haven't they? Tiny, of course, by comparison. The man from the Pru, does he get your interest?
And what are the pricing? I mean, I don't know.
It's on a historical multiple of about 17 times, so it falls outside your value.
Fair in the UK.
Look, it's been a tough time. So insurance businesses like banks are wonderful businesses. You get to take premiums and sit on them and invest that money and only pay the premiums out later, provided you obviously price that risk correctly. So they're great businesses. I do think they're cheaper ones out there. So if you want the Far East exposure, you can look at a bank, something like a Standard Chartered, or Berkshire Hathaway, even in the US.
But I want life assurance. If I want a bank, I would go to Standard Chartered. I'm not totally sure about Standard Chartered at the moment with that fine they've got to pay. But then HSBC has had, equally similar problems.
Yeah.
But I'm looking at the life assurance market for the same reason that Discovery, for instance, gone with Ping, or whatever it's called, in China. The Pru's been there for the last 2 or 3 decades.
Yeah.
Whereas Discovery are just starting. I just like the fact it's a global business with a focus on the Far Eastern market.
I like the business, I like the story, but it's a little bit pricey for me. That's my only.
So you should get down. You're not playing nice, are you? Well, gentlemen, it's been nice to have you both here. Thank you very much for coming. We'll be counting your votes until midnight on Sunday. These guys need your votes, and they really do need to shake up the league. Gary Boyson's just getting a little bit complacent at the top of the league. So follow at SSO League and vote for which one of these 2 gentlemen impressed you most, for whatever reason. Maybe it was just Sid's tie, or maybe it was just because he shot down Massmart. We'll do here on CNBC Africa at 8:30, Match Day 19 on the most merciless stock picking show on TV. But before I let you go, let's remind you as to what happened. Massmart, Sid Vianello went short and Nick took it. KAP Industrial, he went long, Nick shot it down. He also shot down Prudential, not because he doesn't like the insurance sector, not because he doesn't like the great annuity income and the investment opportunities that come with a company like Prudential. They're just cheaper ways to buy into China and buy into the United States if you want to do that, says Nic Norman-Smith, who chose Vodafone, was shot down on that, but his next 2 picks were chosen. Now, is that Sid being strategic and saying, I'm the nice guy here, vote for me? Perhaps it is. But here, Sasol, with its market cap of 400 billion rand, and Standard Bank just over half that size, both of those getting Sid Vianello's thumbs up. Thank you for watching this evening. Do cast your votes, and until next week, do stay cunning. Good night.